but it all has consequences, and I think we are starting to see the consequences of.
Do you want to make money while you sleep? Ever thought of investing in shares and then making a lump sum out of it? Being in possession of even a single share of a business grants you partial ownership of the business. And it's just a start. One share is a gateway to many shares. Those shares often entitle you to one of the greatest benefits of being a shareholder. And we are going to demonstrate how Warren Buffett utilizes dividends to generate income, which can assist you in earning money through dividends. You don't have to be a genius at selecting stocks to earn a significant amount of money during your lifetime. You may have heard repeatedly that investing in the stock market is an excellent method for increasing wealth over time. However, investing in stocks also necessitates time, patience, and expertise. In fact, renowned investor Warren Buffett believes that one particular type of investment could be the key to making a significant amount of money for the average person. Here's what it is. Let us start with the basics. What is a dividend? A dividend is a distribution of earnings by a corporation to its shareholders. If a company issues a payout, owning its stock entitles you to receive that payout. It entitles you to that payout just like anyone else, proportionate, of course, to the number of shares you possess. However, the company may provide shareholders with the opportunity to reinvest funds in their stocks instead. Dividend payouts are measured in terms of yield, which we will explain in the following sections. A higher yield indicates a better payout and vice versa. All ordinary shareholders are eligible for dividends as long as they own the security before their payout date. Typically, established companies distribute dividends, while newer companies prefer to reinvest the funds. Sectors like consumer goods, utilities, telecommunications, and healthcare are ideal for generating dividend income. Real estate investment trusts, REITs, business development companies, BDCs, and master limited partnerships, MLPs, typically offer higher dividends compared to securities. Traditionally, sectors with a consistent income flow from a stable, established industry are the best areas to search for high-quality dividend stocks. Telecommunications and utilities, for instance, are high dividend payers. However, in recent years, even unconventional businesses like information technology have begun to provide high yields. Finally, dividends have traditionally been regarded as a form of passive income that enhances the value of stock holdings, in addition to capital appreciation. However, opinions on dividend payments are changing as concerns about a market slowdown are increasing. So what are the terms that you need to be acquainted with? And now we are going to decode it for you with the help of an example. Suppose that Apple Inc. AAPL currently issues a dividend of 20.5 cents per share quarterly. That amounts to 82 cents per share per year. Warren Buffett holds a significant amount of Apple Inc. stock. Buffett earns a much larger income from Apple's payouts because he possesses a large number of shares. But the crucial point here is this: everyone earns a payout from Apple. That's the beauty of it. Apple is actually Buffett's largest position in the common stock portfolio he manages within Berkshire Hathaway. Berkshire Hathaway owns over 944 million shares of Apple as of the end of Q3 2020. That stake alone is valued at over $129 billion, which constitutes a substantial portion of the overall portfolio's value of $271 billion. So how did Warren Buffett achieve this position? Well, to put it simply, he purchased stocks. A lot of stocks, repeatedly, and he held on to these stocks for extended periods of time. Now, he has historically had access to significantly more capital than ordinary investors, but this can be scaled down to match our own needs. Utilizing payouts to earn money is not something that Buffett has exclusive rights to. Anyone can do this. The method involves building and possessing a collecting of high-quality stocks that consistently increase their payouts as part of a diversified portfolio. Reinvest the growing payouts back into the portfolio. Allow the stocks to purchase more stocks. Create a self-sustaining snowball of wealth and passive income that continues to grow larger. Here are some of the passive income sources that can be utilized as a perpetual asset. First is a currency of high-yielding savings account. Currency is dominant, but historically, it hasn't been a wise decision to hold currency long-term. In a low-interest rate environment, inflation frequently surpasses your return, and your currency actually diminishes in value over time. However, high-yield accounts are safeguarded by the FDIC up to a specific amount and provide daily liquidity. Second is real estate, a timeless investment instrument that can generate passive income while also appreciating in value. It also presents various additional advantages compared to other asset types, including tax benefits, depreciation, cash flow, and the fact that it can offer additional leverage by serving as collateral for borrowing, allowing you to invest in more properties. One issue with real estate is that it does have a relatively high entry barrier. Even if you are financing a real estate purchase, investment properties generally necessitate a substantial initial payment, something that might be unattainable, particularly if you're just starting with investments. If that's a situation for you, dividend stocks could be an excellent alternative. You could utilize your existing savings to create your own forever asset through an annuity. Annuities are financial products that provide payments over a specific time period in exchange for either a lump sum upfront or periodic payments. An annuity is a contract that can offer lifelong or perpetual payments for retirees. Broad market funds, also known as index funds, are another option. They are investment instruments that aim to replicate the performance of either a total stock market or an index like S&P 500. Buffett has stated that one of the most practical ways to build your retirement savings is to consistently purchase an S&P 500 low-cost index fund. I believe it's the most sensible thing to do practically all the time. Do you want to know how dividends are going to make your retirement plan easy? You can even calculate the money you require to retire on dividends. As a general guideline, you can multiply the yearly dividend income you desire to generate 22 and 28 to determine reasonable range for how much you need to invest and sustain yourself with dividends. Multiplying by these figures represents a portfolio dividend yield, i.e. yearly dividend income divided by the portfolio's market value between 3.5 and 4.5%. You can construct a cautious dividend portfolio within the dividend yield range without compromising on business quality, income safety, or sector diversification. Pension income, annuities, and other sources of income can further decrease the number of additional dividends needed in retirement. High-quality dividend stocks can serve as a fundamental element of current earnings and overall profit for a retirement portfolio. A properly constructed collection of dividend stocks can provide secure current earnings growth, and long-term capital appreciation to assist investors in staying on track and making a retirement portfolio last a lifetime. However, from a behavioural perspective, leaving the principal untouched and relying on the dividends it generates each month can help investors ignore the noise from fluctuating stock prices. And if the stock market goes through a significant decline in the early years of retirement, dividend investors have less exposure to the risk of the order of returns, as they do not need to sell more shares in response to lower stock prices. Let us have an analysis of the future of investing in stocks. How safe is it? In any case, you can't simply select stocks at random and hope for the best. Instead, you'll need to compile a varied assortment of high-quality businesses with strong growth potential. This will require extensive research. Alternatively, there is a more straightforward approach to constructing a strong investment portfolio that will benefit you in the long run. On average, dividend yields range from 2 to 4%, which is why the required investment levels are so high. While there may be options that offer higher yields, investors must exercise caution with such products. This is why dividend income is a reliable option, especially for those seeking to retire on it. However, it also means that there is limited potential for value growth in these stocks. Furthermore, safer alternatives such as bonds and fixed income assets are available for those who are highly risk averse. Deciding to live off dividends is a personal decision that depends on the investor's level of risk aversion. This method can be replicated by anyone. If Buffett can use dividends to earn money, and so can you. Start it before it's too late. Someday, you can be the Buffett. Warren Buffett's fiscal counsel, based on years of investment expertise, provides valuable perspectives for individuals in search of monetary stability. By being conscious of these typical monetary traps and making well-informed choices, we can effectively handle our finances, opening the door to lasting prosperity and triumph. Try and your luck, but be aware. We are always here to guide you through the process. We will be back with a new video. In the meantime, subscribe and comment below. See you soon.